Imagine you're riding a market trend. Prices are soaring, your technical indicators are flashing green, and everything feels like smooth sailing. But suddenly, the trend reverses. You're caught off guard, and your gains vanish in an instant. What if I told you there's a tool, a not so secret tool, that can help you avoid this costly mistake? Welcome back to the channel. Today we're going to be diving into the Commitment of Traders report, or COT reports for short, a really powerful resource that can give you a major edge in identifying when a trend might be running out of steam. So stick with me, because by the end of this video you'll learn how hedge funds, who are the ultimate trend followers, leave behind clues that can signal a trend's impending reversal. So what is the COT report? Well, the COT report is a weekly publication by the Commodities Futures Trading Commission, or the CFTC, that provides a breakdown of market participants' positions in various futures markets. It highlights how much exposure different groups like the hedge funds, commercial hedgers, and retail traders have in specific assets. Now, the group we're going to be focusing on today is the hedge funds, also called managed money. Why? Because hedge funds are ultimately trend followers, and they pile into trends with aggressive positions, building up massive long or short positions as they chase momentum. Now, here's where it gets really interesting, because hedge funds leave behind small clues in the COT report, specifically in how large their positions are relative to history. When their positioning reaches an extreme, meaning they've built up a massive amount of contracts on one side, it often signals the trend is nearing its end. Think of it this way. When hedge funds have maxed out their long or short positions, there's little room left for them to keep pushing the trend forward. If you can combine this with other market participants starting to take the opposite side, and you've got a recipe there for a potential reversal. So if you're a technical trend trader, you might be relying on things like moving averages, trend lines, or even sort of momentum indicators. Now, while these tools are great for riding the wave, they don't tell you that the wave might crash. This is where the COT report comes in. While technical indicators might scream, the trend is in play, the COT report can highlight that hedge funds have reached extreme positioning, a sign that the trend could actually be overextended. Let's take a real world example of this. Here's the chart of yen futures, which is just the inverse of dollar yen. Notice how the price was trending lower while hedge fund shorts were building up over several weeks. But right here on the 1st of July, hedge fund shorts hit a historical extreme. Shortly after, the trend reversed, catching many technical traders off guard. However, anyone paying attention to the COT report could have seen this coming. Here's how you, as a retail trader, can start using the COT report to spot potential trend reversals. Number 1, track the hedge fund positioning. Look for extreme, long or short positioning in the COT data. Number 2, compare it with the price action. Use the COT insights alongside your technical analysis to spot overextended trends. And number 3, look out for those divergences. If prices are still climbing but hedge fund positioning stop growing, it actually could be a red flag. And remember, the COT report is free and published every Friday, so there's actually no excuse not to use it. P.S. I talk about the COT reports and signals pretty much every week on the channel, so we host a weekly live stream every Monday, so it's worth checking that out. Now, I went over to have a look at the Commitment of Trader reports, because that's what I trade with most of the time, so I have a little look at where the commercial positioning is. To sum it up, hedge funds are trend followers, but their aggressive positioning often signals when a trend is about to end. By using the COT report, you can actually spot these extremes and avoid chasing the trends at their peak and protect yourself from unnecessary losses. Don't forget to check out the link in the description for our free weekly newsletter, keeping you up to date on key markets to watch and macro insights. Thanks for watching, and I'll see you in the next video.